My name is Thomas Green, and this is my entrepreneurial toolbox assignment for business-related tax documents and instruction booklets. First up, we have U.S. corporate income tax returns. These are also known as IRS 1120, and 1120 is used to report the taxes of corporations, and it is also used to determine tax liability. These reports include income, gains, losses, deductions, and credits. This form is not required for nonprofits or LLCs that file as S corps. You are required to file 1120s whether you have taxable income or not. Similarly, U.S. partnership tax returns, or IRS Form 1065, is used to declare profits, losses, deductions, and credits of a business partnership. Partners must pay income tax on their shares regardless of whether the earnings were distributed. A domestic limited liability company with at least 2 members is classified as a partnership for federal tax purposes. If the LLC elects to be treated as a corporation, they can fill out Form 8832. In addition to paying federal income tax, your state may require you to pay state income tax. In the case of North Carolina, Form CD 429 is their state income tax form, and it is used to make a timely quarterly estimate corporate income tax payment to the state of North Carolina using estimates acquired from your IRS 1120. All active and inactive corporations and all foreign corporations with a certificate of authority to do business or which are doing business in the state of North Carolina are required to file. The North Carolina personal income tax rate is 5.25%, and their corporate tax rate is 2.5%. These returns are to be sent to the North Carolina Department of Revenues. North Carolina sales and use tax. A sales tax is defined as a consumption tax placed on retail sales, leases, rentals, and any taxable services in the state required. Use taxes are used in relation to sales taxes and are applied when merchandise is purchased from outside of state lines for use or consumption. You can receive your sales tax number by filling out Form NC-BR online. After receiving your numbers, you can file sales and use tax returns by filling out Form E-500. Quarterly returns are due on the last day of January, April, July, and October for the previous 3 months. Monthly returns are due on the 20th of the month following the end of the current month. Every business person or facilitator in business in North Carolina that meet the following criteria must register online or by mail with the Department of Revenue to receive a certificate of registration. Selling tangible personal property at retail, selling or providing personal property at retail, renting or leasing property, operation of a small business, selling taxable service contracts, or charging admission to an entertainment event. You do not have to register if your business is already registered to file and pay sales tax and is therefore already registered to remit use tax, or the business has paid its vendors all North Carolina sales and use taxes due in the state of North Carolina on its purchase. Next up is the privilege license tax. This is a tax on the privilege to practice a specifically outlined licensed act professionally. Before a person engages in business, trade, or a profession for which a license is required, they must first be licensed by the department, and the license must be displayed conspicuously at the location of the licensed business. A business license should be applied for using B-202A. An individual license should be applied for using G.S.105-41 and must be issued in the name of an individual. Some occupations that require the filing of the privileged license include attorneys, physicians, accountants, real estate appraisers, home inspectors, engineers, photographers, and funeral directors. An excise tax is an indirect type of taxation imposed on the manufacture, sale, or use of certain types of goods and products. Most common excise taxes include tobacco products tax, alcohol beverages tax, and the motor fuel tax. Other important taxes to consider include the withholdings tax, which is the amount withheld from employees and sent to the government, the servience tax, which is the tax on the removal of natural resources within a taxing jurisdiction. Some examples of the servience tax include the production volume tax. This is levied on the volume of oil and gas produced. The production value tax, which is levied on the value of the oil or natural gas produced. And the volume tax, which is a combination using both volume and value to calculate your tax. Also in the state of North Carolina, we have the white goods disposal tax. This is collected for the disposal of white goods, which include refrigerators, clothes dryers, and freezers. And the solid waste disposal tax, collected on disposal, municipal, or construction debris or waste that is transferred to a landfill or out of the state. For this kind of tax, you must fill out Form NC-SWR. Thank you.